Welcome to this breakfast debate on delivering PRS at scale. The spotlight has, of course, been shone on the private rented sector in the last couple of years, but it's yet to deliver at scale. So what steps do the private and public sectors need to take to build on some of these early successes, and just what is the size of the prize?
From a supply perspective, there's so little supply. I mean, the Lions Review is coming out today, identifying a shortage of 80,000 homes a year. It's clear that we're not meeting the supply. And in that context, we have to think about a different way of moving the market, and actually institutional finance can provide that and can plug that gap and to try and make sure we deliver more housing.
Over the past 18 months or so, we have put around about $2 billion into residential in a range of ways, social housing, student accommodation, old age housing, and some PRS to boot, and including build to sell. If you then stop and say, well, what's the PRS, private rented sector, all about? There's no one on the panel that's going to disagree that it is an important part of the future. It's underdeveloped in the UK, and it's an exciting opportunity. My guess is it ought to be representing circa 30% or so of all forms of tenure in the future. My feeling is it's principally an urban phenomenon, and L&G would absolutely expect to be in the vanguard of investing in that sector. The thing that matters to me the most, though, and is not sufficiently talked about, if you're a long-term investor, then income produced by rental property that's properly managed, properly procured, properly managed, is a very attractive investment asset class. Because even though the triple net yield is relatively low, it doesn't matter too much because the inflation matching attributes of PRS are very strong. You manage PRS well, the retention rate is very good. So it isn't short-term income. It actually, if you think about it top-down, looks like very long-term income. And if you manage it well, it absolutely should be where long-term capital will invest. And if long-term capital wants to invest, the good news is the type of property that is procured is fit for purpose over the long term. That means better quality, and the type of management that goes with it will be high caliber. So I definitely see it as being a major part of the future. L&G have already started to invest, and it will grow and get bigger, and a generation from now, I think the world will look very different from a UK perspective.
I think part of the problem is people look at PRS and developers look at PRS, when they think they can't sell. And if they think they can sell, then they'll bid the price and they'll sell.
Well, plenty of house builders say that they're not interested because they can sell for more effectively, and that's their role to reward their shareholders.
Yeah, and I suppose that's part of the problem, because that then increases land values, which paradoxically means that fewer people can afford to buy, which then creates the demand, and you've got this latent demand. And as Elliot says, people that rent, I mean, PRS is sort of here, isn't it? 30% of people rent in London, but they're not really happy with the product that's there. So I agree with Ryan, we need some sort of incentive or something to kickstart purpose-built development.
If you look at how apartments work, they're really no different than hotels or student housing. You have a different kind of person, and they stay for a different period of time, hopefully. In students, they're there for a year or two. In hotels, they're there for a night or two. But fundamentally, you are looking at a cash flow operating business, and you're valuing yield for cash flow. When you are selling condominiums or houses, you're valuing capital value, vacant possession value, and price per square foot. So the metrics when you buy student housing or hotels, people will only mostly talk about yield, and sometimes as a shorthand talk about price per key or price per room. When you look at residential, I would challenge anyone to really look at when you talk to any value or how they value on a yield basis. And when they do value on a yield basis, is at a discount to what its vacant possession value is, and therefore people revert to VP. So inherently today, I think the challenge for scale is that when you do the math, Damien, that you were talking about, the house builders are right to build for sale because they will make more money selling than holding, because that's where the inherent market value is today. So from my perspective, the way to correct that is to turn the PRS sector into a commercial cash flow asset class, not what would be a traditional for sale residential asset class.